One. Hi, this is Jim Deitch, and I'm privileged to have Aaron King with me this afternoon. We're going to talk a little bit about the impact of the change from a you go to it economy, where you go to the store, to the movies, to entertainment, to it comes to you, precipitated by the pandemic. But we're also going to talk about how all this fits in to some of the changes that were underway in any event in the residential real estate and residential finance market. So one of the things I learned about Aaron today is he's trekked to 70 different countries in the recent past. So Aaron, maybe we just start a little bit about what was that? What was your favorite country, and how'd you do all that?
Yeah, sure. So I think when I was 17 or 18, I met somebody who had just come back from 6 months in Asia. And it just blew me away that you could travel for that period of time. I had never thought of that before, met anybody like that before. And she explained just sort of like how she went through all these countries, how she saved the money beforehand, et cetera. And I just vowed that I was going to do a similar trip at some point. I had started a company in the mortgage space in 2001 and ended up running that company for about 7 years. But when the timing was right, I took off for a similar trip of my own. It ended up being 3 years abroad. I hit about 70 countries, a lot of favorites. I think the best thing I did on that trip was I found work as crew on a sailboat, which was sailing from Panama to New Zealand. And so I ended up spending several months in the South Pacific Ocean, seeing a lot of islands, seeing a lot of the countries there, and just having one of the best adventures I could imagine.
Well, that is awesome. And I think the company you were talking about early on was your entrepreneurial flair that got started with Notary Link. So maybe a little bit on that.
Yeah, absolutely. So I got a really early start in the mortgage industry. I started working for a mortgage company when I was still in high school. I got my notary license pretty much as soon as I turned 18 because I saw notaries making pretty good money with what seemed to be a pretty interesting job. And so started doing mortgage closings full time at a pretty young age. When I was 21, I started a company called Notary Link based on the premise that there are notaries like me all over the country, and building a network of those notaries and closing attorneys and contracting them out to banks and title companies. Seemed like a pretty interesting business. It was a case of really good timing because this was 2001, 2002. There was obviously a huge refi boom about that time. And so it was a case of very, very lucky timing as well.
Awesome. So looking forward, do you see, as you look at the landscape over the next 3, 4, 5 years, both in terms of residential finance market, the real estate finance market, and how Snapdocs fits in, but more broadly, what do you see happening? What are some of the fundamental changes that the industry is going to go through?
So I think this is actually another case of really good timing, right? I started Snapdocs in 2013 with the premise of digitizing more and more parts of the real estate closing and the mortgage closing process. By the way, I think a lot of people oversimplify what it means for a digital closing. They think it's sort of just e-signatures on closing packages. I think of it much more broadly. I think of all of the interactions, the relationships, the workflow, the communication, the decision-making, the transparency. There's so much that can be digitized in this very complex process of a mortgage transaction. And so we've been working on those types of problems for several years, and obviously a lot of that has accelerated quite a bit this year. And I think, with any technology, you have to work backwards from ultimately what's the experience that you're driving to the users of that technology. And I think now through 2020 specifically, lenders, title companies, notaries, consumers, everybody's favoring a world in which a lot of the interactions can be moved away from a paper-based in-person interaction, which can be quite cumbersome and error-prone. And they're adopting much more rapidly a more digital-based set of interactions, where software can really augment a lot of that workflow and a lot of those interactions. And so this is the trend that we see. There's frankly a lot of work that software can do better than people can. Through that process, people can be lifted up to work on the more creative and interesting parts of the work that needs to be done. And I still think we're in the very, very early stages of this, but it's really exciting to see the industry start to accelerate the adoption of platforms like Snapdocs.
It's really interesting. Our industry as a whole has a labor content just in the origination process, not including some of the ancillary things that happen that are not paid for in the cost stack of the mortgage. But somewhere around 65, 68% of the cost of generating a mortgage is labor content. And that's been pretty much the same since 2011, 2012. So despite all the efforts of the industry to try and digitize and to get some efficiency, we're stuck at that 68%. And it's not all sales commission. There's a pretty big operational component to that. I was thinking about this and making some notes and looking at some of the MBA mortgage banking profitability reports in the Miami airport, and in walks Kevin O'Leary from Shark Tank. So I had a very brief conversation with him, and it was really pretty interesting. But when I was flying back out, and I'm thinking, what would he say about the mortgage business with 70% labor content? And I just could see him, stop the madness, stop the madness. How are you going to stop this madness? So, Aaron, how are we going to stop this madness?
I think it's a really interesting question, and we have a view on this that I think is going to become more mainstream, which is that a lot of the labor cost that you're talking about lies in the interactions between parties, not necessarily in an individual institution's sort of internal operations. And so there's a few ways that you can attack the challenge and opportunity that you just described. You can take a lender and you can look at all the internal operations about how underwriting works with closing and origination, et cetera. You can also look at the interactions between a lender and the roughly 2,000 title companies they might interact with in a given year. And this is the key insight that Snapdocs is built on, is that we think there's a lot of opportunity to solve those problems of interacting with this highly fragmented ecosystem that really every participant in the mortgage supply chain has to deal with. And I think that when you look at the problem from that angle, you can start to solve a lot of these inefficiencies in ways that you couldn't if you just looked internal to one institution's operations. And so I think it's going to come primarily from those two methods, and we're focused on really the relationships and interactions between parties.
You know, that's a really, you've got two really great thoughts there. One is kind of the network effect of how many people touch a transaction and the labor content there. And the second thing you said a little earlier was really thinking about starting at the back end of the process, because so many people, when looking at transformation within the mortgage banking business, start at the front end and try to work to the back. But I think the real key is to start at the back, figure out what you want, which is an error-free loan with the least amount of labor content, the fastest speed to close, the fewest stipulations for the investor, and the smoothest transaction to get it to the ultimate servicer and with a good customer satisfaction. That's what you want, and you start at the end. Question for you. Intercontinental Exchange bought Ellie Mae, which was kind of like an 800-pound gorilla grabbing another 800-pound gorilla, at least in this industry. What do you make of that transaction, and what do you think it does to the strategic landscape for the whole digitization process of residential finance?
So first of all, I really love the way that you articulated the goals. I think working backwards from the goals you described about error-free transactions with as little back and forth as possible, with as few sort of issues, errors, or anything to correct. I think there are very pragmatic business goals that any digital transformation should be in service to. I see a lot of people get very caught up with this idea of going digital without having clear, pragmatic business goals that you can clearly measure to see how digital impacting that. And so I appreciate the way that you laid that out. I think that acquisition is really exciting. I think that a lot of influential institutions and people are realizing that there's a lot of improvement to be made in the overall mortgage supply chain. And I think we're going to see innovation come from a lot of different angles and a lot of different players. And we'll see how all this unfolds. Our vision is quite simple. I think one way that you can drive towards a more efficient end-to-end digital closing process is to acquire a lot of existing companies and string them together and figure out how to remove inefficiencies amongst those companies. We have the same end goal in mind, but we have a slightly different approach, which is that we want to build software and a platform that connects all of these institutions, all of the title companies in the country with all of the lenders, with all of the notaries, to help them give all of their consumers a better experience. And so there are two different methods in service to the same goal. And frankly, this industry is so big and there's so much innovation and improvement to make that I think a lot of these different paths will provide value, and a lot of companies will be very successful in service to that goal.
Do you sense ICE kind of getting Simplifile as well as Ellie Mae and MERS? They really are kind of starting at the very back and kind of marching a little bit forward. What do you think that means for the whole ecosphere of lenders and lender service providers? What's the future look like 3 years from now as this progresses? And not just ICE, but the whole thing, the whole description that you just gave about taking the friction out and getting that network effect to making people work with much less friction than they currently do.
Yeah, I think it's a great question, because I think we're actually right at the beginning of a transformation about how technology companies in mortgage think about building their business and think about driving value to their customers. When I look around at a lot of the incumbent institutional technology companies in the mortgage space, they're not always built from driving value to their customers. They're not always built from first principles of thinking about what should this ecosystem look like in the future. A lot of them make very defensive decisions about their technology and lack of integrations across other partners. I think 3 years from now, lenders, title companies, all these institutions in our industry are going to have a lot more choice about which parts of their tech stack they want to string together. I think there's going to be more fungibility where they can swap out certain providers more easily. And I think the result is going to be that the best products and platforms are actually going to grow much faster than any company that's not obsessed with driving value to their customers. We've seen a lot of other industries go through this transformation. I think real estate and mortgages is a little bit further behind than a few others we could list, but ultimately we're going to go through the same transformation, and it's going to be wildly positive for lenders and title companies and everybody else involved. And ultimately, actually, it's going to be wildly positive for consumers as well. We have a belief at Snapdocs that if you want to give the consumer a good experience with a mortgage transaction, you have to first solve a lot of the underlying complexity amongst all these parties that have to work together to put that transaction together. And I think we're going to see massive efficiencies there, and thus consumers are going to benefit.
One of the elements that one of the people I interviewed for the book speculated on was that ICE is looking at not just kind of the settlement and the registration of the mortgage as being the end all, but it's really the trading platform for loans that can be homogenized and have a really good data set with them, and that ultimately that could bring back more of the whole loan market, maybe not the PLS market, private label security market, but the whole loan trading market among financial institutions and other people looking for fixed income. Does that resonate, or is that thumbs up or thumbs down, Aaron, from your view?
I guess generally thumbs up. Yeah, I think I think there's gonna be a lot more data shared, a lot more data captured, a lot more sort of data, like fluid data across a lot of these participants in the transaction. If you think about it today, for a mortgage closing, the title company is going to manage the closing. They're going to check the documents and make sure that they're accurate. They're going to send them back to the lender. Lender goes through a similar process. Lender sells it to an investor. They go through a similar process. As we start to integrate these systems more, and as these technology companies start to both gather more data and harness more data, you're going to be able to package this data and transfer it amongst parties in a much more seamless fashion, where I think it just, you get an opportunity to kind of rethink how you're going to use that information. And I think it does result in what you just described.
Aaron, one of the things that really has impressed me about Snapdocs and kind of following the history of the company is that you've got adoption in 15, 16, 17% of all loans, first mortgages closed in the US in a recent month. How do you go from 0 to hero that fast?
It doesn't feel fast. It was, I started coding Snapdocs 2012, 2013. We had very modest beginnings in terms of the product that we were building and the scope of what we considered we could impact in the mortgage ecosystem. And we've just always been heads down, really focused on our customers, really understanding their problems, specifically from the viewpoint of how do we help each of our customers interact with the ecosystem around them? How do we help title companies interact with lenders and consumers and notaries, et cetera? I think it just goes back to compounding growth, which still is one of the most amazing, I think, forces in the universe. If you can steadily double the size of your business every year, which is roughly what we've done for the past 6 years, then in the early days, it's, mildly impressive, but if you can keep that up for a few years, then suddenly the growth becomes really, it really becomes something.
It really does, and I just look at the national debt on the issue of compounding and say, wow, that really does become something pretty fast.
Yeah.
So I've asked the questions. Anything that you'd just like to share about any topic, kind of open-ended as a CEO in this ecosphere?
I guess just a lot of optimism. I think there's a lot of really interesting companies in our space. I think that we work a lot with lenders these days, and I think lenders are really starting to wrap their heads around digital transformation. I see them getting educated very quickly. I see a lot of lenders getting a lot more technical, a lot more thoughtful about how they stitch together, the technology stack that they need to do their business. And I just think a lot of really great products, innovation, and ideas are coming into the space at a faster rate than they have in my 23 years of working in mortgage. And I think the impact's just going to be wildly positive. Frankly, I think that there's been an imperfect relationship between the mortgage industry and technology in the past. There's been a lot of vaporware. There's been a lot of false promises. There's been a lot of high costs without a lot of value driving. And it's not void, obviously. There's some great companies that have been built. I just think we're right at the edge of that, accelerating to the point where really, really meaningful impact is coming from technology. And it's just a really exciting time to be working in this space.
Aaron, I really appreciate you taking time out of your really busy schedule to speak with me. Really enjoyed learning a little bit more about Snapdocs and what you've been able to do as CEO and starting, I think you're very modest to say you started as a coding project to get the market share you have, but really enjoyed being with you and appreciate your time. So thank you.